This is our Forex blog for June 13th, 2012, and I had a Windows reboot last night, so I brought this up after the market was obviously open for many hours. This is our FX range bar build your own trend currency meter, which works live only. We also have ones that such as the FX Trend Pro currency meter that can show you past bars as well as live and future bars, obviously. This one shows the dollar and yen, obviously, versus all the rest of the pairs. The real-time trends on the top. The daily, weekly, monthly trend are here. I have our older daily, weekly, monthly trend tools, which are live only. Just as a comparison, I don't ever usually show this in class. So basically, the real-time strength or weaknesses on the top in histogram form. It's made up of multiple different statistical tools. Some of them measure the direction, some of them measure the intensity of the direction, and then underneath that I have the daily, weekly, and monthly trend. On the sortable one, you can bring this up and sort it to always find the strongest and weakest pairs. Right now, the Swiss is going up against 100% of other pairs on the hourly trend. Euro is very strong, yen's strong. The Australian, New Zealand, CAD, and pound are the weakest. By sorting it, you can always, see the strongest ones on top, weakest ones on the bottom, and find the best pairs. You can see incredible strength in the euro here. The CAD, very weak across all time frames. Real time, 15-minute trend, hourly trend, daily, weekly, monthly. So if you wanted to look for buys, in high probability buys, buying the euro versus the CAD, and it's pretty clear that the pound is weak for the most part on all the time frames except the weekly trend is up, but it got much less so around 11:30. So let's take a look at the euro CAD. Yeah, I don't usually go over pairs. I don't leave running overnight, but because of Windows update restarting my machine, I'm going to do that today. We'll bring this up on here. This will download the tick data and create the range bars. And this is pretty much, part of our easy three-step Forex trading system. Use a currency meter to find the strongest ones to buy or the weakest ones to sell. I will show how to add that indicator on here. FX trade signal. Trade signals. You add that on there. And it's going to put buy and sell signals on the chart when they, generate. So basically, you look for these entries, and then usually when it goes a pip above the previous bar's high, or you can see in this case right here, it's kind of a choppy area. It had trouble getting above 28.80 earlier, as well as here. If you see a buy signal like that, you might want to wait for it to break out before you get in. But nonetheless, if you got into a trade here, you had a small loss. This one right here led to from about 75.80 all the way up to 29.40. So it's a 60 pip move. And the circles are counter trend trades. The triangles are trend trades. So that was one very strong currency that you could trade. Obviously, the CAD was really weak. The Swiss became really strong in real time. The 15 and hourly trend were up. The daily trend were up. That's more than enough to trade against another currency that's blood red on all time frames. So the CAD Swiss, you're looking to sell. The CAD's on top, Swiss is on the bottom. And these chart patterns are based on range bar patterns. When the market's gone down too much, or our statistical tools are saying it's more likely to reverse, we put some counter trend circles on there. The trend trades are based on the triangles, and it's usually a 3 to 5 bar pullback, or a couple other bar patterns tend to give those signals. When you see the currency meter, is this weak on one currency and very strong on the other? One of our patterns, and I don't go over this much in our Forex blogs anymore because most people are trading the patterns waiting for the signals. But anytime you see a rectangle pattern, and I prefer it to be about 10 to 15 pips, in this case it's about a 20 pip range. But one instance about this is that as it's in this rectangle pattern already, you can see even a smaller one developing right here. When it breaks out through the low, it's a good place to get short, and most of the time the market's going to stall at the 1.32 to 1.618 FIB target. In this case, it went right to the 1.618 and a few pips underneath there, but then reversed. That's why I always go over in class, the 1.618 most of the time is probably 80% of the time the maximum profit you're going to make. If you use trailing stops to get out, more than likely, as this thing is going down and comes up, it's going to trigger the trailing stop right here, very much near the 1.618. So if you're going to use a trailing stop, you might as well just exit at 1.618. In this case, you would have been short here at 93.17 and out at 92.82. So it's almost a 40 pip move, and your risk in this case, if you get short when it goes underneath those lows, is right above the highs of the range right here. I would use this little mini high right here versus the high up here, so you have a tighter stop. Sometimes you have false breakouts and it comes back up. You might as well get out with a 8 to 12 pip loss versus a 15 or 20 pips, so it can improve, because you can always get back in. If you get stopped out with 12 pips and you get back in again and make 30 or 40, you're going to have a net profit. But if it goes against you, you're going to have a 15 or 20 pip loss that you have to make up. It's much easier to get back 8 pips than it is 15, and easier to get back 15 than 20 and so forth. So, minimize your losses and try to maximize your profits. Most of the time when the market's, very strong like this and the other one's weak, it's going to go to the fib targets. If it stalls at the first one, exit half and use a trailing stop for the second half. In this case, it went down a little bit more and you'd be out. Keep in mind that these patterns on here are based only on range bar patterns, where the price is in relation to daily, weekly, monthly pivots, and also our statistical ranges. They do not use the real-time tools yet. This is still beta, and I'm working to put in these tools. The real-time trend is very key, and when you have a real-time trend that's as weak as this, obviously you want to ignore the counter-trend signals. The green ones are usually when the market's underneath 3.0 band, and when you see these, you can start scaling into counter-trend trades. Most of the time you're going to make 15 to 30 pips doing counter-trend. With the extreme lows for buys or the highs for sells. Underneath the bars, they're buys. Above the bars, they're sells, obviously. I'll just finish our class just reviewing some of the signals on the chart. The hourly moving average is a gray line in the middle. When it's above there, it's more likely to go up. When it's below the hourly moving average, it's more likely to trend down. These containment bands at 1.5 is in red. Those rarely are the highs. Usually it's the white band which acts as the end of the move, and the green bands are almost always the maximum, 80-90% of the time the maximum move. So basically we have support resistance areas on here. I have my daily pivots over here on the left, weekly, monthly over on the right, and when it's above the daily pivot, which is right here, it's more likely to go up. It's also another filter just like this. When you start seeing some patterns, use the real-time momentum. Obviously, because of my Windows update last night, I don't have that to show for earlier today. But when you start getting pullback trades, you can either buy when it goes 1 pip above the bar's high, but you wouldn't want to do that in this case because the 20-day moving average is there. Wait for a deeper pullback. The second one right here, it's underneath the previous day's low. You might wait for it to break back above the previous day's high. I meant to say previous day's high. You might go along here. You would have got stopped out. You get along again here the second time at 30. Use the trailing stop to get out. It went up to 74. You just made 44 pips. You lost 8 pips on the previous one. And that's why you don't worry whether the trade's going to work or not. You just simply take the trade, and if it fails, you have a tiny loss. If you get into another trade and have another tiny loss, so be it. And one thing that you can do to improve your odds is, especially if you have a bigger account, after 2 or 3 losing trades in a row, if you see a really high probability trade, like one that pulls back to the hourly right here, it doesn't have that much statistical weakness. Anything underneath the 80 level is not that weak. Wait for the trailing stop to get triggered. You can always use these signals and wait for the trailing stop to get hit before you get in. So you would have actually got into this trade somewhere around here on this bar right here at 29. Here's your trailing stop. It never closed underneath there, and so you're in the trade, and you would have got out right here in the close of this bar at 73. In the trade at 29, out at 73. I'll show a few other charts here. Here's the pound dollar. Now this one, again, earlier in the day, we don't have the real-time tools. Here, this one went up to the 20-day moving average. It's also a daily pivot. Pulled back right near the hourly. And notice the momentum on the way up. This is not a bad buy right here, especially since it hit that resistance. You don't know if it's going to go above that resistance, but if it does, it's going to go up another pip most of the time. You would be in this trade at 69. Comes up to this area here. You can see there's less strength there than previous, and so it's not likely to bust through it. If it couldn't go through that area the first time without that much with intense momentum, then it's definitely not going to the second time. You got a pullback again with almost no selling, and if you wanted to buy it when it goes above these bars high right here at 72, you can get in. Again, it comes up to this area here and it can't break out. You might want to exit half your trade with 5 or 6 pips, and then it goes up and hits the next resistance area and stalls. You can use this to scalp the market. Here's another buy signal. Again, this one had many times to explode up. It had trouble, a false breakout over the previous day's high, and then it hit the previous day's high for the second time during the day, failed to go above it, so it's very likely to reverse. So an experienced trader really wouldn't be looking for buys right here. Wait for it to go underneath the lows, come back up and retest. I would have went short right here at 50.